Hello, everyone. This is Drupmeister. Welcome to This Week in Bitcoin. Today is August the 10th, 2018. Strong hand, long-term thinking. Offended by selling. All right. We've got some really awesome guests. They've all been on the show before, but it's been a while for some you haven't seen for a while. They're in 3 different time. We're all in different time zones in the United States. I got Josh Nussbaum coming from the east side. I got Blake Anderson coming from the central time zone. And I got Michael Krieger coming from the mountain time zone. I'm in Los Angeles for the week. I'll be speaking tomorrow. Come out to the event at 7 p.m. It's linked to below. It's in downtown LA. It'll be really laid back. We're going to start off. Josh Nussbaum, he's in the venture capital land, okay? And so he sees cryptocurrency from that perspective. It's a unique perspective. Tell us what is going on, Josh, with you.
Yeah, I think since the last time I was on, the last year, obviously, as most people have probably seen, the market's gotten pretty crazy. And I think that there's sort of a couple of reasons for that. There's a lot of newer cryptocurrency hedge funds and venture funds, and they're extremely large. And this sort of takeaway seems to be, let's look for the smart contract protocol that is the next internet. And, it seems like every other day or every week, I hear about some other protocol raising some insane round at a really, really high valuation. And I think partially it's a little bit of circular logic where a lot of those funds have raised capital and look at the markets on the public side and see that things are mostly correlated, and it's a bear market, as I'm sure I don't need to point out. And so what ends up happening then is they decide, okay, if we don't want our investors to withdraw their money, so let's figure out how to do venture capital style investing, negotiate deals at prices low enough that the public will see sort of that brand name and buy it at a higher price versus what's sort of long-term value. And it's not everybody, but it seems like it's more often than not these days. And I think the other thing is there's sort of now a bit of a comfortability with LPs in just buying Bitcoin directly. And so for most investors, they can't buy it out of the fund, and so trying to find new ways to capture some value, even if the upside is high and it's possibly short-lived, and the bottom could fall out at any moment.
Very, very interesting. Would you say, I see some venture capital people tweeting, mostly out of California and stuff. What is it? Is it blockchain or Bitcoin for these guys in general?
Yeah, I think I have to decipher between the sort of West Coast, and especially in the Valley, and sort of the rest of the country and world. And I think for a lot of Silicon Valley, it is blockchain and looking at it as some kind of internet protocol or even platform, despite not being that. And so thinking about sort of the applications that can be built and the protocols and capturing value that way versus the monetary use case and does it store value.
Okay, so another thing that people have said, and I want your opinion on, that ICOs are going to make venture capital a thing of the past. What do you think about that?
Yeah, I've heard this before, not just specifically this, but with the Jobs Act and crowdfunding, I think it's very, very different. For one, most ICOs, just about all, at least in the last 6 months, are total garbage. Don't need to raise capital that way. It's really figure out ways to get advisors that make it look like it's quality, or come up with big ideas, sell to a greater fool. It's kind of like if you've ever seen Wolf of Wall Street, that idea in sort of the boiler rooms in the 90s of let's figure out ways to signal quality because we have, the internet as a way to blast to a lot of people at once versus having to cold call to convince people to buy a penny stock, and then sort of the bottom falls out right afterwards and you realize that that sort of was not exactly what you thought you signed up for. And which is usually nothing to do with the product itself, but for the most part, with the hopes that it will become more valuable if you get in early and sell to somebody else.
And one final question, and I think the other guys will have questions for you too. And I forgot to tell you guys, feel free to ask each other questions. And people in the chat, you can do super chats too. I'll read your questions. In the venture capital space, I mean, obviously it's about making a lot of money. I'm curious about their technical, when they get into crypto, the guys that are getting in crypto, how many do you think know what the Bitcoin halving is? Do they? I mean, that is a really important thing to me. If you watch this show, everybody knows I'm a big promoter of the 2020 Bitcoin halving. I mean, do they know that basic type of thing?
I would say a lot more than if you asked me this question a year ago. I think there's sort of so much interest since the big poll run, especially last summer, and people are spending all of their time on Reddit and Twitter and learning about these things. So I would say there's probably more knowledge about it now than a year ago. It's still probably over the entire venture capital landscape, smaller percentage. But in terms of people who are actively investing in the space, probably a decent percentage.
Okay, and one last question real quick. Lightning Network is a huge second layer solution being built on top of Bitcoin. There are going to be other second layer solutions. There are going to be companies specializing in building applications with these second layer solutions. In the next 2 to 5 years, are the venture capital people, are they going to flow into the second layer solution in the Bitcoin people or into the speculative altcoin other stuff?
Yeah, I think it's more likely that the former happens. We'll see how long it takes. I think it'll take people losing money and investing in these things and starting to look like a venture capital portfolio, which is, things don't launch and it goes to zero and there is no product market fit versus there's some value even if it hasn't launched and nobody's using any of these things. But yeah, I'm actively looking to invest around Lightning. So if anybody watching this, starting a company, please feel free to reach out. We have one company that we invested in that I can't talk about specifically, but is working on some stuff related to Lightning as well.
Oh, wow. People, be in motion. Pound that like button. All of these guys' links are below. Now, I focused a lot on Josh here. Don't worry, the other guys are going to get a chance to speak. It's because, this week, it started with, there have been a lot of big money talk. Oh, the SEC didn't approve the ETF, so the big money's delayed. And, big money is becoming a big issue here. For me, I know that the big money is going to come in eventually. But I want to give you the venture capital. This guy is in the venture capital land. He's giving you a unique perspective here of what's really going on over there. My two other guests, do you have any questions for Josh? Anything you guys want to say about this before we move on here into some other subject matters?
I would just add that one of the things that I found frustrating, and I'm guessing that the VCs have been focused on this, although Joshua can sort of confirm, is that what I would suspect they're doing is trying to just like wiggle into the pre-sales as much as possible and get as much as they can there, and then just dump them, when the thing starts trading, if they start trading up. Now, I haven't been following, and this would be curious, maybe Joshua is following this. A year ago, any ICO would list, and it would list like multiples above what the pre-sale or the original sale was, and you could just flip it real quick. Are they still pricing a lot higher than the pre-sales now? Like when they start trading, are these new ICOs trading up a lot or flat or down? That would be an interesting thing that I'm not following at all.
Yeah, I would say most are definitely trending flat or down. I think the exception to that is, especially in Asia and China specifically, there are ICOs that do trade above what certain investors can get in at. And I think that there specifically is where VCs are doing more of that than here, where the line between a hedge fund and a VC firm has become pretty blurred in this space. But most VC funds that I know, at least, anything that they've invested into, they still hold. They haven't sold it all, but the hedge funds, it's completely different. But that's becoming harder and harder. And I think founders are also getting smarter, at least the ones that are really trying to build something for the long term and putting in all sorts of lockups, investing, and things that you would expect them to have.
I was going to jump in for just a second, and I was going to say that, yeah, I mean, any type of emerging market, you want to look for it to emerge and then reach equilibrium. And if you can get in really early, there's, that early time where you can make some money, but we're almost looking at how overheated can that get? What are the actual diminishing returns in terms of how many ICOs can be listed and how many people can ride that wave versus now the trend seems to be, can we fork a UTXO set? Can we do a chain split? And then like, for example, BTCC or Bitcoin Core, which is an actual protocol change because people kept calling Bitcoin Core a protocol when it's an implementation. So they actually made a Bitcoin protocol split called Bitcoin Core, and that's been trending viscerally up recently. So it's interesting to see that trend of people wanting to get in early to be able to make those killer returns, the diminishing returns making it so that not all of the ICOs are getting listed, and then going off into this new area of how can we continue to do this and try to tamp down some of those diminishing returns. So it's a very, very interesting, fast-moving, complex space to be able to try to watch and glean information. It's a nonstop action comedy, basically.
But yeah, BTCC, that's it's more than just a trolling thing on Twitter. For all you people who know, I think there's quite a few people who know what Blake is talking about there. All right, we've got a question from the audience, and this one is Blake. Blake, can you see that question that Benjamin Migtal just asked out there? I think you can handle this one, but I'll read it out. I'll read it out loud. How soon till we have an app like TaskRabbit where we can buy and sell labor locally and anonymously, where people can hire electricians, plumbers, and mechanics outside of a legacy market?
That's a good question. That's like getting down to the human action element of economics to a super individual and decentralized level. I mean, I think that would be great. I think that one of the things that people talk about a lot as we get to this libertarian utopia type of future with lots of decentralization and self-imposed regulation, one of the things that's going to be required to be able to do that is reputation has to come back. A lot of these central planning institutions are kind of anti-solidarity, anti-reputation. People get a little bit lazy in terms of vetting things, and reputation coming back and getting these decentralized systems where somebody can be a plumber or a gardener or something like that, and people will feel safe with using an alternative method from these type of mainstream sources. I think that's valuable. I think that we're a little bit far away from that. There needs to be a little bit of a social shift in terms of people need to understand implicitly why reputation is important instead of just making the noise with their mouth and saying reputation. So again, I think that as an end goal, that's really valuable and that's really cool, but I don't know. I think that social change is a little bit slow to take hold. So that might be a little bit farther off than some of these on-ramps that we're talking about right now that are going to have a more visceral and ephemeral effect on the market in the short term.
Well, beautiful answer there. And yeah, and Benjamin asked this question before. I mean, we're so early on in all this stuff. I mean, it'll happen eventually. I think it's a little bit down the road, of course. Thank you, Benjamin McDowell, for the $10 super chat. Also, Colonel Swan Jr. sent $2 in the super chat. Thank you very much. He said, "No need for gold. Bitcoin is pegged to Bitcoin." Oh yeah, dude. 1 Bitcoin equals 1 Bitcoin. Value your wealth in Bitcoin. Pound that like button. Get your Trezor and your t-shirts linked to below. There's all sorts of awesome affiliate links. Okay, now we're going to move on to the subject matter that was discussed on Caitlin Long when she was on Trace Mayer's show, and something she wrote in Forbes that is linked to below. And that is the correct. The fractionally reserved Bitcoin. All right. So we're talking about big players. We're talking about venture capital people. Now we're talking about the entities that, that guy brought up gold a second ago in the chat. How gold is made into paper gold. You can buy paper, basically fake gold from these gigantic institutions. And in the Caitlin Long thing, she is worried about Bitcoin becoming a similar thing when you're buying. There's going to be fractionally reserved Bitcoin out there. I think this is probably going to happen. I don't think it's going to make that big of a difference because of the holders out there. But Krieger, I wanted to get your opinion on this first, on that article. And do you think this is coming down the road?
Yeah. So I think she brings up a good point. But if you read her series and what she's actually saying, she doesn't seem that concerned about it. She seems like she's saying, hey, this is something to pay attention to. And I agree it is, knowing how fraudulent the financial system is. And when you read that article and you see what she's talking about, she's basically saying, she mentioned this one really crazy example of like Dole Fruit, where they had, where there were like multiples of supposed shareholders with lawsuits than actual shares existed. And all these holders could point to their brokerage statements that saying that they own the shares, and it was more shares than existed. I mean, that's just a great example of the traditional financial system, which is essentially based on fraud. Now, the reason I don't really worry about this, let's just talk through an example. So what she's talking about is a tail wags the dog kind of a situation where the financial players start creating derivatives or phantom Bitcoins, and the big players decide they want to trade those derivatives, right? And then that market becomes so huge, it's actually multiples of the actual underlying Bitcoin that's trading. And therefore, that market then is the tail wagging the dog, right? It's influencing the price of the actual Bitcoins with phantom Bitcoins. Now, yes, this could certainly happen, but I don't think it would be something that could be sustained over any long period of time for one main reason. First of all, Bitcoiners and the Bitcoin community, from what I've seen watching it for the last 6 years or so, are some of the best people I've ever seen at sniffing out BS, right? So when there's something that's off or something that's wrong, Bitcoiners are really, really, really good at that. The best I've ever seen of a community on the internet. So therefore, what would happen fairly quickly if there was suspicion that there was a tail wagging the dog and these derivatives were making the price go down where it shouldn't, you would have very quickly, in my view, people running into the actual markets to buy real Bitcoin and buying up Bitcoin at a low price. And then very quickly, you'd have a disconnect. You'd have actual Bitcoins trading at a different price than the derivative Bitcoin. And so therefore, I don't see a situation where the derivative Bitcoin can ever really control the price of the underlying. I don't see that's possible. Now, here's the big difference between gold and Bitcoin. And this is something I've made the case over and over again. Yes, you can buy physical gold and take delivery, but you're not going to do that for billions of dollars of gold. It's extremely costly. It's extremely difficult. And by the way, there have been many articles written on this when institutions have tried to take, let's say, a few $100 million of delivery of gold. You get pushback. They don't really want to do it. So with Bitcoin, you don't have that issue. You can buy it and you can move it to your Trezor or your Ledger or whatever you want very quickly and very easily. And that ease of taking delivery and moving your coins off exchanges is it's sort of like this immune system in Bitcoin that's built in that, in my view, will prevent this nightmare scenario that she talks about. I think it can happen in the short term, but it won't be something that it can't suppress the price for months or years in my opinion because of that.
Long-term thinking people, Krieger, that was an amazing freaking point about you can't get your $1 billion worth of gold. I mean, but you can and you should be able to get your $1 billion worth of Bitcoin like that. And that is a tremendous difference there. Very good point, man. I love this show. All right, Blake, what do you have to think about all this stuff?
It's a very good point about gold. There's actually been specific examples where people want to take ownership of their gold, and they'll go to a holding or storage facility and be like, "Here's the money that we want for this gold. Come and put it in our locker." And they'll be like, "No, we're not going to do that." So people actually have to go to a forge where mines are actually giving gold to the forge, and then they take delivery from there, and then they'll put it in their own secure locker. They actually have to physically subvert the authority of the holding institutions to be able to collect physical gold. And I think that there are risks, though, in terms of paper gold diffusing paper Bitcoin diffusing the value of Bitcoin. There is some type of information overhead that a lot of us in the Bitcoin community early that are prophetic enough to be able to understand the information overhead. We run full nodes, we hold our keys. But there are a lot of investors that I think are going to come and want to get their hand on Bitcoins. They're going to want somebody else to be the custodian of those Bitcoins. There's going to be Bitcoins that are loaned, so there'll be hypothecation on basically the hypothesis that if somebody doesn't pay, that you can then collect this. Then there's rehypothecation in terms of somebody saying, all right, I'm going to daisy chain lend that out, and then like 5 layers of hypothecation are now registered as 5 Bitcoins when there's only 1. I think that there is a concern of that. I'm in agreement that it won't be a long-term problem because it's actually this inverted pyramid. Well, I can't even make the shape of a pyramid, but it'll be an inverted pyramid where the bottom, with the actual amount of Bitcoin that there is versus the amount of Bitcoin that's being traded, it's a double-edged sword because you're making something that is scarce less scarce. So there's not only a scarce amount of it, but there's all this weight that's happening on top. And that means that if people come and they start taking physical ownership of their Bitcoin, which is a liquid enough asset, like you pointed out, that you can take it and you can take delivery of it, unlike gold, that will make a very, very weak position under which you would be able to try to create all of this paper Bitcoin. So it's a very, very, very precarious house of cards if they try to really aggressively go out and diffuse the value of Bitcoin with lots of paper Bitcoin, because the risk that somebody's going to take the rug out from underneath them, and the ability to look at different wallet addresses and look at holding accounts from an outside position where you're not an auditor that can be, controlled and bought as a centralized regulatory body. There are things that make it so that these situations are harder to capture regulatorily, and then make sure that you actually control the underlying instrument. People control gold that are in these positions. You can't really control Bitcoin, least of all because of things like the UASF and people that are very, very prone to calling out scams in the space that was looked at. So I think it's a very important balance to look at the very, very real possibility of another bubble happening here, and then also look at why it won't be a long-term problem and how we are going to be already, in possession of the tools that we'll need to dismantle this type of nonsense that will diffuse the value of something that should be rare.
Yeah, I think there's going to be a lot of people getting into the space that don't understand what controlling your private key is, and think that, hey, lending out my Bitcoin is great. And there are going to be actual institutions that are going to be like that, maybe also, that are going to lend out to these guys and allow such a fractional reserve situation to occur. So guys, don't lend out your Bitcoin. Control your own private keys, or else you're going to make the fractionally reserved institutions that you dislike so much even wealthier. Control your own private key.
It's like the diametric opposite of holding to try to make it more scarce and have the gold or have the value go up. If you lend it out, it's not only not holding, it's inflating the amount of 21 million Bitcoin in a soft type of derivative sense. So I would say it's good to think about it in that way to some extent.
Yeah, Adam, I just wanted to jump in real quick and just say that also one of the things to be aware of, look, at $6,000 and the current ownership profile of Bitcoin, it's not something to be worried about. I mean, this is something you get worried about maybe in the next boom. And let's say the price goes to 100,000 and you got Wellington Management and all these hedge funds owning it. And those guys don't care about private keys and they lend it out. That's when you're going to, let's put it this way. In the current structure of the market, the price, the ownership, distribution, it's not a risk. What she's talking about is if you get in the next bull run, the run is dominated by institutional buying and by institutional holding, then you have to start thinking about it. But the price would be so multiples of where it is now before we have to even think about something like that.
And I want to ask the panel this: the bull run, I think the next bull run will be dominated by institutions, and so I think everybody out there should be prepared for a scenario like this to happen, where the fiat price of Bitcoin will drop an unimaginable amount at one point when this is all discussed, when all this plays out. So just have a strong hand, people. All right, we've Josh, what's your opinion on this fractionally reserved Bitcoin situation, a possible situation?
Yeah, it's funny, when I read that article in Forbes, I was thinking of something that Charlie Munger said several months ago when he was asked about Bitcoin, and he was pretty bearish and said something along the lines of, the reason that he's bearish is every time something has value and is scarce, people will create more of it some way or another. And most people, myself included, laughed that off and thought that he thought it was a company and that the Bitcoin company would just create more Bitcoins. But I actually think that this is probably what he was talking about, or at least in my mind. And things like this, altcoins, it's just sort of the tip of the iceberg, because something has value because it's scarce. People will come up with ways to at least fool other people into thinking that there are more than there are. I'm reminded of when Coinbase sort of spoke to their users and realized that people were buying Litecoin because they thought it was a cheap version, they couldn't afford a Bitcoin. And so, I think it's just sort of necessary growing pains as people learn and get educated what it is that they're actually buying and what the value and advantages are to it.
Do you think that the next bull market will be dominated by institutions that will trigger it?
Yeah, absolutely. It's been calling people who work at large hedge fund institutions that it seems like it's going to come fairly soon. I think custody is still an issue. A lot of large funds over a certain size can't custody their own keys, and so they need some sort of solution. And there are some out there, but it's still limited. And yeah, I think that's absolutely true.
Well, again, with these custodial solutions, this is it's going to become a honeypot. I'd love to hear what everybody thinks about this. I think there are going to be a lot of custodial solutions that are going to make these institutions comfortable, but I also think one of them is going to get hacked, and that's going to be that'll be bad for the fiat price when that happens. Blake or Krieger, do you foresee stuff like that happen, or any other thoughts on this matter?
Yeah, I mean, from my end, I think I saw an article talking about Goldman even talking about a custodian solution. I don't like that. I didn't like that at all. I mean, what I would want to see in this space is those that are coming up with custodian solutions are not the people that are essentially pros at creating fraudulent financial assets and, rehypothecating everything into oblivion. So, I would rather see, like tech geeks and Bitcoiners from old school come up with, custodian solutions independent of these financial institutions. That's the thing that scares me a little bit, because if you get all the institutions then wanting these traditional Wall Street entities to hold their Bitcoin, then that would make me a little bit uncomfortable. Yeah, the price would be through the moon from here, but that would make me really nervous, because that would be the big holders, right? The big institutions holding, and then holding it with the same people that wrecked the economy 10 years ago. I wouldn't be so comfortable with that.
Interesting. So do you think the institutions will dominate the next big bull run?
Oh yeah, for sure. I mean, I think, as you've always said with the halvening, if you look back the last two bull runs, it was right around when that halvening happened. It was right before it in both cases. So, I've said for a long time that the next, I think probably up till mid next year is when we're in the danger zone still, like of this bear market. But once we get to like middle of next year, you'll probably start seeing people start to say, okay, we're a year out from the halvening, let's get long. And by then you probably will, as Joshua alluded to, have better custodian solutions. Because I think it's 150 million, I believe, is the number, that above that you need to have someone as a custodian, essentially. You can't have your own keys. So those two things, I think, are going to come together at almost the exact same time. The next halvening plus a custodial solution. So that's going to be, and that's when you're going to get the funds coming. So yeah, I think that's what's going to drive your next big run. Yes, big money.
All right.
Well, there's also a regulatory malincentive here in terms of that window that you were talking about, where you get over 150 million, you're actually required to give up your Bitcoin keys to a custodian, and that needs to be switched around in terms of this digital bearer asset, because that's the opposite of what you want to do. I think you're totally right. If we can have tech people creating these custodial solutions where there are multi-sig accounts that are no bigger than X size each, where you have transparency into a key that you've been provided. Even if it's going to be in an omnibus account, there are ways to program the money to make sure that it's chunked up in a way that it's not this giant bowl of value honeypot, where then all of a sudden it's worth it to point all these computers towards it and to go through rainbow tables and try to unlock the funds. What you want to do is you want to chunk out the Bitcoin that you're holding in a way that makes it more secure. And there's a vested interest in the legacy custodians not to do this, because they want to have it all lumped together so that they can loan it out 33-1, and then you get back into the 2008 crisis, which was the reason that we did all this in the first place. So I think that very good points were made on Michael's point there.
All right, and do you see the next bull run, basically these institutions fueling it?
Yeah, definitely. I think that right now we are seeing people making statements about Bitcoin to try to suppress the price, the bull market. A whole bunch of people are saying, it's terrible. It's worse than rat poison. It's like, well, cui bono? Who benefits from that? People wanting to collect and accrue cheap Bitcoin before the next halvening comes up. And then when you look at things from the question of, who benefits, it helps to really glean understanding of why would they be doing this stuff. Because the long-term consequences is it's going to go up, and they're going to have to spend their credibility to do this. So what is the actual value if there's actually a calculable cost? And I think that the value would be to try to push it down and accrue cheap Bitcoin.
Ignore the crypto noise, people. It's noise to get you to give out your Bitcoin. If you sell your Bitcoin, you're probably not going to like the dudes that they're going to end up with it. It's the same people that you're like, oh, they control the world. I mean, it's the institutions, it's the banks. They can talk it down, but they're smart dudes. They're slowly acquiring, most likely. Okay, well, this has been an awesome topic. Do any of you guys have anything else to add to this this hypothetification and all this madness that we might eventually see here? And All right.
Well, getting your value out of a fork when you have paper Bitcoin is an impossible problem to solve. If there's paper Bitcoin that doesn't exist and there's a fork, and then you owe that back to your, like, that's gonna be a spicy meatball. And I guess that's all I wanted to. Does Josh have any thoughts about this? I feel like I jumped in on him about to talk a couple times, so I'm starting to feel guilty about that.
No, I was just going to add before, and now it's a little late, but I was just going to say that there's sort of third-party custody for these institutions, but there's also a lot of family offices, high net worth individuals that don't really know how, in a secure way, to put a lot of money into Bitcoin and secure it themselves and secure their private keys. And so we actually invested in a company called Casa, which is doing a 3 of 5 multi-sig where you control your own keys, and that's a lot of their early customers.
Yeah, Casa. Blake, you know Casa, right? Have you heard of that? And,
I know it means house in.
No, okay, no, it's the company.
That's about all I know.
No, we won't get into that one then. But you made a great point about the forks, and Trace also brought up that when he interviewed Caitlin Long, and I mean we're already seeing that on a small level. How Coinbase, so many people will keep their Bitcoin at Coinbase, they haven't been able to get their forks. They still need their B gold and everything. I mean, this is the price people pay. If you don't control your private key, you're going to get into this madness where these whoever's holding it for you is going to make up some excuse, or there's going to be some little small print somewhere saying, hey, we get to keep your forks. It's too complex to give you the crypto dividend. And there you go. Pound that like button, people. All right, speaking of forks, we're going to bring up Bcash here, because Bcash is an altcoin that forked off of Bitcoin over a year ago. And recently there was a story, and I talked about this on my show. I think I talked about this yesterday. How a big Bitcoin guy noticed the big problem with Bcash and reported it to the Bcash people, and saved a lot of trouble for Bcash. Blake, can you explain this situation? And would you have done the same thing, Blake?
Well, this is very, very interesting from a risk management information science perspective, because risk management professionals take risk management extremely seriously. And I think this is an extremely good example of that case. What happened was there was a critical vulnerability discovered in Bitcoin ABC, which is the most popular wallet implementation for Bitcoin Cash. So Bitcoin has Bitcoin Core as their most popular wallet implementation. Bitcoin Cash has Bitcoin ABC. And one of the Bitcoin Core developers, Corey, was looking through the changes that had been made to Bitcoin ABC to look for any type of fixes or vulnerabilities that they had noticed that then would be backwards applicable to Bitcoin Core, just to make sure that not only are we working towards our own solutions, but taking advantage of everybody else's work to avoid some type of overlap or scope creep or bloat situation where people are working towards the same thing when they don't need to be. Well, what he discovered was there was a pretty big change. There was a large refactor in the kind of core element of how Bitcoin ABC works. And when he was looking at the change logs and about how many people had signed off on this, it was only about 2 people, and they had done it in a period of a week. So he looked through the code, and it took him about 10 minutes to find the SIG hash bug, which would have basically split the Bitcoin Cash chain into 2. There was a wallet software version for Bitcoin ABC that about 50% of people still had, and then there was an update that about 50% of people still had. And there was a vulnerability in the update where if somebody had specifically formatted a transaction, it would have made all of the chain incompatible for one set of the wallet software in perpetuity, which would have made a 50-50 chain split, which would have been absolutely devastating. Now, a lot of people that think that this is a competition and we want to, go for blood would say, don't call it out, go and capitalize on that vulnerability and kill off Bitcoin Cash. But I don't think that's a good thing to do, because when you look at this as an individualistic experience, people don't want to see individuals lose a lot of money and be hurt. No matter if they've backed the wrong horse, you don't go hurt individual people. That's not a good thing to do, especially not if you're a libertarian or staunch existentialist liberal. You don't do that. You don't want to see individuals be hurt. So actually, as I was reading through the risk that Corey took upon himself to disclose this when somebody could have, figured out who he was, figured out that he knew this, and then also figured out that he was one of the people that knew this. If somebody else had hacked the system, somebody might have wanted to arguably kill him over this. And he took all of that risk upon himself to handle the situation exactly the way that he would have wanted it handled if somebody had found a problem with Bitcoin Core. And again, I was like tearing up as I read the way that he handled this, because it's an issue that's so close to my heart, and he handled it so well, so nobly, that it really, really, really is something to be respected. And I have a tremendous level of respect for what was done and how he handled it. It's easy to go and make changes to software with the Silicon Valley attitude of move fast and break things. Let's iterate, let's get things done. But when you're in a large live material value transfer system in production, you really don't want to do that. And large refactors of code right at the core of what's going on, I mean, that's really, really dangerous. So I think that A, it was really great the way that he handled it, and B, it should give people pause in terms of putting lots of money into some of these alternative chains and implementations and things like that. They are pretty neat and pretty nice to have in terms of competition, but when you don't have enough eyes on something and a fatal mistake begins to happen, it's something that you really, really, really don't want to have all of your money in.
Beautiful, beautiful explanation there. I agree with you. I want to just, what do you think, if he had not found it and this would have played out, what would have happened to the cryptocurrency market? And any thoughts on that?
Well, I think it would have been really bad for Bcash. I think that people would have lost money. I think that there would have definitely been some articles where people conflated Bcash with Bitcoin, and instead of just saying an exchange got hacked, with the easy example of saying, well, if somebody loses cash in the back of a taxi cab and there's a theft, you can't say that the serialized index of dollars was compromised and somebody can print infinite dollars. So that was a good way of saying, okay, somebody had their exchange robbed or hacked, and so they lost Bitcoin, but that doesn't mean that the protocol is compromised any more than it would mean if dollars got stolen, that the printing press of money is compromised and people can print infinite dollars. This would be a harder situation to describe in terms of why it's not Bitcoin that was at fault. Yes, it's an implementation for a competitor, but trying to explain that to a layperson and having them pay attention enough, it would have definitely created a lot of a PR overhead, not to mention the amount of people that it would have hurt on an individual basis. So I think that the way that it was handled was very, very, very prophetic in terms of risk management ability.
Awesome. Josh, you have any thoughts on this story? How do you think it all would have played out if it would have went down?
Yeah, I think it's a challenge, right? Is people buy, Bitcoin Cash because they don't know much about cryptocurrencies and see it as a cheap version of Bitcoin, and they lose their money, and they're sort of turned off towards cryptocurrencies forever, and they never, decide to actually buy Bitcoin. And so it's not hurting sort of the developers and the people who led to the fork, possibly, by handling it the way that it was handled. And so, yeah, great respect for him and the way that he did that. And disclosing it after the fact too, which I think, he could have easily just sort of forgotten about this, but told the entire story and sort of laid out the risks in a fork too. Because at the protocol level, the bugs, when there's value associated with something, it's much more vulnerable than people think. And so if you fork a chain and you take it from one snapshot in time, and you're not continuously updating and patching things and have really strong protocol developers working on that, it's very likely that you end up in a situation like this, as we've seen with several other folks as well.
Well, yeah, I think not being anonymous, saying it was him, he's setting an example for everyone out there. He's saying, I did this, you should do this. He's putting his face, he's putting himself out there. And I think he's trying to set a good example for the entire cryptocurrency community, setting a good vibe. Krieger, any thoughts about all this?
Yeah, so absolutely, and I agree with what everyone's saying wholeheartedly, and I want to just kind of put it in my own terms. For me, coming from the financial system, and I quit Wall Street when I realized how horrible, how fraudulent it was, and the bailouts and all that. When I first came across Bitcoin and learned about what it was, I was struck. One of the things I was struck by, not just the opportunities for freedom, but by its design, how ethical Bitcoin is compared to the traditional financial system. Just by existing in the way that Bitcoin exists, it makes the financial system look bad. And I think that's great. And, one of the things, what he did by essentially, almost a competitive chain, saving them, is a great example, and one that I think he should be absolutely applauded and celebrated for. Because look, if you start finding vulnerabilities in chains or protocols you don't like, and you keep it to yourself, or you hope that they go down in flames, that's the worst possible thing you can do. You're essentially becoming the system itself by doing that. That's what the NSA does. That's what the CIA does. They look around for vulnerabilities in Apple and other, tech giant software, and then they exploit it. They don't tell the companies about it. They use it for their own nefarious purposes. So, I mean, if you go down that path, you're as bad as they are. So yeah, like that's the whole point. I'm interested in this community. I'm interested in what we're trying to do here because we're trying to make this world a better place. So if you're going to act like those, the intelligence agencies, then, I have no interest in being part of that.
Very good. Blake, do you have anything to add?
No, I mean, I was just explaining to chat, like I literally got choked up, like as my left brain understanding of this had to traverse my corpus callosum to my right brain to conceptualize it in a way that my wife could understand. I kept getting choked up by trying to articulate to her the personal risk that Corey absorbed to make sure that individual people didn't get hurt, regardless of people's, competition streak in terms of these protocols. So I think that that's, really something to be respected.
You did mention how he was at risk for serious physical harm. Can you go over the scenario where that would happen? I mean, that's pretty freaky.
Yeah, definitely. So he was at serious risk of tremendous physical harm. This was a huge bug that would have forked basically 50% of the node implementations for a protocol, which is live and in production and storing value. So if he went about this with his name and said, here's my full name, here's the vulnerability that I discovered, and here's how it needs to be fixed. If somebody had used that vulnerability to attack and split the chain before anybody could fix it, people would know, A, that he knew about it, and B, he would not be able to prove the negative that he didn't do it, and somebody might have been motivated to literally kill him over this. So the amount of risk that he absorbed on himself to make sure that other individuals were not hurt, again, like that's so brave that I'm getting choked up even now trying to talk about it. It is something to be admired, to say the absolute least.
Wow. And again, Blake knows about this stuff, dudes. I mean, what's your risk? What's your specialty? I don't even know that term.
Risk management information scientist, but I actually kind of work as a cryptographic economist.
All right, there you go. That's a mouthful, but it's hardcore. Pound that like button, people. Again, check out all these links, the guys' links below. They're very interactive dudes, and they've got all sorts of great information that they put out there. And Josh is interested in Lightning Network, people. So I know some dudes actually that I'm going to try to get in touch with Josh after the show, actually, because they're be in motion, people. Be in motion. You're not risking anything by just giving your idea out to someone and say, hey, man, this is my idea. Do you think it's good or whatever? That's in motion there. You're not doing like what Blake is describing. That guy was putting his everything online. Whoa. All right. So we're getting close to the end of the show here. I want everybody. I know these guys have lots to say. If there's anything that was left off, anything they'd like to add about their specialty or anything like that, we'll start with Josh. Anything you want to add that was left out? Any comments on things that were brought up, and a story of the week? Anything you want to share?
Yeah, nothing that I can think of other than just to add to the conversation about the vulnerability. I think if the situation was inversed, and it was a Bcash developer that found a bug in the Bitcoin code, it would have been handled very, very differently, and probably used to attack the chain rather than the way that it was. And so I think setting that example is really important and noble.
Interesting. Very interesting theory there. Well, Josh, thank you very much for being on the show today, breaking down the venture capital knowledge and everything for us here. I'm glad to get people that are in the belly of the beast in New York on the show to say what's going on. Krieger, what was anything you had to add or share?
Yeah, definitely. So I don't know if you guys really know, but I don't spend as much of my time on this stuff as all you guys do. So you're way more knowledgeable than me. So I write about other things. But I did want to actually pose a question to everybody based on what I think is the most important story of 2018. I'm not talking about, it's related to Bitcoin and everything, but it's bigger than that. And that has to do with this recent flexing of muscles, let's say, by the tech giants and deplatforming Alex Jones and InfoWars, irrespective of what you think of his content. This is a big deal, right? Because it all happened at the same time. Google, Apple, and Facebook all acted within 12 hours of each other to deplatform him. And so Twitter has had some of its issues as well in the last few days. I don't know if you're familiar. This guy, We Meant Well, he's an Iraq war whistleblower. He worked for the State Department during the Iraq war, and he came out and basically talked about how journalists lied about everything, et cetera. He's been banned from Twitter permanently. And then two libertarian guys, this guy Scott Horton, who writes about war a lot and empire, and Daniel McAdams, who is the executive, I think, director of the Ron Paul Institute, also was suspended. So those two were suspended. So for me, I feel like this is the biggest story of 2018 so far. And I think we're going to see a lot more of this, because once this is opened, once this door has been opened and it's been established that this is something you can do and that will be done, it will be done to other people and it will expand. It won't just be Alex Jones. Next, it could be RT. And then next, it could be anyone that's against war. And so I've started looking into, and I don't have the tech chops, I think, as any of you do, but I have started looking to Mastodon as a Twitter alternative, just as something to explore, because I know it is a more decentralized social media alternative. So I was wondering if anybody on the panel has looked into Mastodon, has any opinions on it. I know Bitcoiners have started opening accounts on there. I think, what's that, at NVK, that guy? opened
Rodolfo.
Okay. So yeah, he, I think, started like an instance there that's become popular. So I wanted to see what you guys had thought of this, if anything, because I'm really not up the learning curve much.
All right, this is a huge. This should have been one of the topics today, because on yesterday's show that I did late last night, I talked about Mastodon, I talked about Rodolfo, and this whole week actually, I've been bringing up Alex Jones, Stefan Molyneux, all these people that are get sort of blocked or blocked. That this is an opportunity for these people to get into crypto. Okay, this is an opportunity for someone in the crypto world to make a crypto alternative to all of this. Now, Mastodon is great too, because it doesn't have advertisements. It's not going to get blocked. But I want to, when the rest of the crew here starts talking about it, I mean, especially Joshua, you fund companies. I mean, this is if there was a company a social media company that somehow incorporates crypto and not silencing people, would you be interested in something like that?
Yeah, absolutely. And we invested in the past in a company called Blockstack, which people might be familiar with. And there's a team right now that's building something similar as well to that. And yeah, I checked out Mastodon. It's pretty interesting, and probably of all the things that are out there today, the best of them. You still have sort of the network effects problem, but if enough people migrate from existing social media platforms, you can get over that pretty quickly. Yeah,
I see this as an opportunity, and I agree with Krieger that this is a huge story. Again, I'm going to say they're private corporations. That's why other people have got to create their own private corporations that are better than these ones that involve crypto, that everyone will flock to. And then who cares what YouTube does? Who cares what these things do? Blake, what's your thoughts on all of this?
Unfortunately, I haven't had any time to play around with Mastodon yet, but I think that there is a huge problem with this amount of centralization that we've allowed to just kind of infiltrate our lives. I mean, the problem with Mt. Gox, when they had 80% of volume for a long time and everybody's using their ticker symbol, and then eventually Mt. Gox was just ubiquitous in the crypto community with everybody trading on there, and then it went, belly up. That was a huge lesson for a lot of us early on. Now having all of these huge technology conglomerates. I really like the band Muse. Matt Bellamy is a great musician, and one of the lyrics in one of his songs is "all of history deleted in one keystroke." And I think that that's a really, really good kind of like shallow allegory for what is at stake if we don't decentralize some of these things. A lot of the ways that I decentralize is we have private servers. We have the Bitcoin Mumble server where there's audio chat that's hosted on an AWS that we can move the hosting. I talk to a lot of Bitcoiners there. It's I think called the Dragon's Den Bitcoin Mumble. That's a really great place to talk. I do some stuff on Twitter. And I think that Mastodon is another great layer that we can add to that. I love that we're on YouTube, but at the same time, YouTube and Google have been making me pretty upset lately with banning Alex Jones, which I see basically as a Stephen Colbert type character before he was hosting The Late Show. Back on Comedy Central, I thought that Stephen Colbert was really, really funny. I thought that a lot of the stuff that he was doing was jokes. I kind of think that Alex Jones is in the same category. I don't know that deplatforming people instead of arguing with them to show the superiorness of your ideas is a good way to go. When you have a vacuum of dissent, there's no a sounding board upon which to illustrate the superiority of your ideas and your traditions through argument and debate and discourse and dialogue. So I don't think it's a great version of the future that's achieved by deplatforming and banning people that are either anti-war or too edgy because they're comedians. I mean, there are certain things that are beyond the pale, and private companies are private. It's private property. They can have the rules the way that they want them to be. But also, I mean, it becomes this huge thing is what's their fiduciary responsibility to their shareholders and investors in terms of making money, how much money is lost by deplatforming these people, how much PR does it come into this with how much do they need to manage PR, or do they lose money? There's a whole lot of questions that I think that could really be talked about in depth about this issue. But I think that one of the main takeaways is the more that we centralize, the more that we risk this type of all of history being deleted in one keystroke. And Bitcoin is great. It's antithetical to that idea, which is a huge reason that the UASF held so much weight in terms of people wanting to increase the block size, which would have naturally decreased the node count. And people said, no, we're not going to do that. We're going to increase, block density, and we're going to make it so the block weight is 4 megabytes. I think that, as was said earlier by Michael, this community is really, really good at going and sniffing out nonsense and making arguments to counter it. I think that the cost of refuting bullshit is high, but it's a cost that should be paid. If somebody is debating in good faith, seeing them banned, like some of the representatives of the Ron Paul Institution, is really a terrifying precedent. And I would have to tend to agree that it's one of the most important stories of the year.
I do want to say, all these people being banned, they got to take personal responsibility. Put up a Bitcoin address, all you people being banned, and you will get, because when you are banned for, Alex Jones is losing a lot of money by getting kicked off of all these things. He made money from this stuff. He should be putting up crypto addresses saying, hey, if you support me, send it over here. There's no shame in that. Stephen Mullen is one step ahead of everyone. He's had crypto up there for years, and he's done great because of this. I see this as an opportunity for cryptocurrency, because it just, someone's got to have an innovative model to incorporate cryptocurrency with these alternative views. And again, we have DLive is a new platform also that's from Steemit that I'm trying to put stuff onto. I guess I should give them a shout out also. Alex Jones and all those people should be trying to get on the anything different. They should. He's got a lot of guys working for him. Try to diversify. Because if you are personally centralized when you are depending on YouTube so much, people should not be depending on, if you're controversial, or if you're anyone, you shouldn't be depending on 3 platforms so much, just in case something like this happens. Back to you, Michael Krieger. Anything else you have to say about all this?
I did want to just add a few points. So first of all, and this is very disturbing, in the case of, let's say, Peter Van Buren, who's been apparently banned permanently from Twitter, that's 7 years worth of commentary and information that's gone down the memory hole. You can't find this. That's crazy. That's a lot of life work. That's also something that history should have, like posterity. We're, as human beings, we're losing by having someone's a whistleblower's work of 7 years just being disappeared. That's very, very disturbing. But second, I did want to just have a little debate here about the private company argument. First of all, I don't really consider these companies private. First of all, Google is making a censorable web search for the Chinese government and basically listening to China and doing whatever they want. Any terms, disappearing it from their search. It's extremely evil. And if Google's willing to do that in China, why wouldn't they do it here in some nefarious ways? We don't know what their code is. We have no idea. Secondly, with Snowden's revelations, we know that these aren't really private companies. They had backdoors for the NSA and the CIA and PRISM, all these things. So how can you really call these companies, these essentially platform monopolies, private? They're kind of pseudo-private, really. Yeah, they're private in the sense that they make a lot of money, private for their shareholders, but are they really independent of government? I would say no. And then lastly, what about phone companies, right? Is a neo-Nazi allowed to have a landline phone? Can AT&T say you can't have a phone because you're a Nazi? No, they can't do that. And so the point is, are we really talking about, when we're talking about communications, are we really talking about this is a private company issue? Or are we saying that somebody out there is afraid of the efficiency that the internet is allowing ideas to spread? Because there's no, you have access to mail, the postal service, even if you have horrible views, right? Or engage in hate speech. So it's not quite as simple as people make it seem by just saying, oh, they're private companies. This is the new communication field that we're living in now. So, and these are sort of government entities as well, in my opinion.
I think that you're totally right, and I think that you're making an equation to digital book burning, which I think that it is. All this communication history. There's an African proverb that says that when an old person in the village dies, it's like a library burning down, because you've then lost the ability to get all that information out of them. And this is really a similar thing. It's digital book burning. It's not something that I think that we should let go quietly into the night without commenting on. It's definitely not something that people shouldn't be at least marginally upset by. It is something that I think that we need to not just be upset by, but take and vote with our dollars elsewhere, because that's the most power that we have in the current situation.
Yeah, I agree with that. I boycott them all then. I mean, I think that's the answer. Josh, what do you have to say?
Yeah, I agree with everything that's been said. I just wanted to point out that George Gilder just published a new book called The End of Google. I believe that's what it's called. That sort of gets to the heart of this idea of the big web platforms looking more and more like extremely large countries and having too much control in many different ways. This being one of the most important over our lives and as a result our data. And yeah, I would just highly recommend it to anybody who's interested in this topic.
What's it called? The End of Google?
The End of Google.
The End of Google. Oh, some people dream of that. All right, Krieger, do you have any? I want you, since you brought this up, I want you to have the last word on this topic.
No, I do agree. At the end of the day, I'm not like crying to government to solve the situation and entrench Facebook as a utility. That's not what I'm saying. I'm just trying to get people to think. And my suggestion has been to people to delete Facebook permanently. I had an old Facebook account. I'd never really used it. I deleted it permanently forever this week. And I do know for a fact that Facebook executives, particularly now, their stock collapsed a couple weeks ago, 20%, don't forget. They're vulnerable now. And so, like you said, vote with your actions, delete freaking Facebook, and they'll pay attention. And if enough people do it, Facebook will go away and we'll find something else. Yeah, I mean, we don't need Facebook. I don't want to entrench Facebook. I don't want the government to come out and say, Facebook, you are the monopoly. You have this monopoly and we're going to entrench you and regulate you. That's not the solution. Although I do think Facebook's rules should follow the First Amendment of the Constitution. I think as a platform monopoly, they should follow the First Amendment as a guidepost, and they're not doing it.
Okay, very, very, very good here. I wanted to quickly, we're running up on the end here, but Blake, in the chat, and you still haven't had your conclusionary remarks yet, actually. So this is a two-pronged question. Anything you want to add? Anything that's been left out? Any final comments? But here in the chat, you see there's a guy, Javier Suarez, asked, "Hi guys, privacy is what is needed. Will Bitcoin incorporate ZK snarks? Mimblewimble may not be enough to conceal identities." So that's a Blake question right there.
That's a very good question. It's hard to know what types of processing overhead versus privacy solutions are going to be implemented into Bitcoin. To a large extent, the amount of privacy that you're able to glean from cryptocurrencies is how you manage your keys. If you dox yourself with your key address, then trying to go through and wash your coins becomes very difficult. So trying to find a good balance of usability and then also privacy is difficult. But I wanted to go back and talk about Facebook. Yeah, I mean, I deleted my Facebook a while ago too. I was on the World Crypto Network a lot very, very early on, and I had my public figure page linked to my Facebook, had thousands and thousands of followers, lots of good stuff. And eventually I took a snapshot of all that, so I have the information, and I deleted it because I don't agree with the way that Facebook runs their platform. I had been suspended or banned from Facebook almost more than anybody that I have ever heard of. And I'm not a controversial person. I wasn't like going in there beyond the pale and saying stuff. It was that people would agree with my ideas, and then they had certain flagging thresholds where people would disagree with something, and then they would flag it, and I would get suspended, and it would take down my public figure page, my joke friendly community page, and then also my private page. And that had happened enough that I got sick of Facebook a while ago. And then now, looking at what's happening, there's this thing in music theory where the notes that come later change the notes that came earlier, and now the notes that are coming currently in the Facebook song makes me really, really glad that that I deleted Facebook a while ago. So I think that their 20% stock hit is just absolute poetic justice, and that more people should delete their Facebook. Other than that, I think that the Ross Ulbricht trial is a really dangerous precedent where he had a kangaroo trial, that he deserves at least a retrial, and that I think that a lot of people should throw some weight behind, at the very least. Even if you think that Ross did something wrong and deserves some form of punishment, he needs a retrial. The amount of problems with that trial, with the murder for hire rumors that he wasn't charged with, tainting the way that he was charged, and then with a lot of the agents that collected the evidence being corrupt, and now they're in prison. I mean, that needs to be a retrial. Hopefully, if it was you or your family member or your child in prison and all of those circumstances that unfolded, that you'd want to at least have a retrial and have a fair shot at justice for your family member. So I want to kind of donate my closing statements to please support Free Ross in any way that you have time to do.
All right, that is very good there. Thank you. Thanks everyone. And Javier Suarez, thank you for that $5 super chat question. Okay, before we leave, I want to just remind everyone I'll be in Los Angeles. I am in Los Angeles. I'm speaking tomorrow. So check out that link below. I'll be speaking in Philadelphia. Big event. What's his face will also be there with me. I can't think of his name. Yeah. Ken Bozak will be with me next Saturday in Philadelphia. I'm tired still. I ran this morning. It's hot out there in LA. So check that link out below. This Week in Bitcoin's on every Friday, so keep coming back here every Friday. Tomorrow's the Beyond Bitcoin show. I post a new show here every day, the One Bitcoin show. Hey, gang, do any of you guys have anything else to add? The three of you, you guys rocked it today. All right, good. Then we're all settled. I hope everybody enjoyed this as much as I did. So pound that like button. I'm Adam Meister, the Bitcoin Meister, Disrupt Meister. Remember to subscribe to this channel, like this video, share this video. Check out the links below to learn all about these guys. There's one link below. Burning Down the House by the Talking Heads. If you're watching yesterday's show, you'll know why I'm posting it today. I want everybody to have it. It's a great song. Mr. Byrne actually grew up in Baltimore County just like I did. So, hey, have fun, everybody. See you later. Bye-bye.